Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 15th of June. We've had a challenging end to the week. US markets in particular dropped on Thursday by between 5 and 7%. And this June jolt has seen the sort of share price drops that we haven't actually seen since the March melee. Number of reasons behind that, most significantly some extremely bearish comments earlier in the week from the OECD, followed up by the Federal Reserve suggesting that any economic recovery could actually be put back into 2022. As such, it's likely to leave interest rates at these historically low levels for some considerable time yet. On top of that, there were further outbreaks of the coronavirus in Florida, Texas and California, which also meant that there were fears of perhaps a second spike coming along of the pandemic, if only on a localised basis. So with all that in mind, and despite the fact there are still some positives to look out for, not least of which of course is the extraordinary stimulus that we've seen from both governments and central banks, that has nonetheless taken some of the air out of the tyres, which is not necessarily a bad thing. A lot of people had been wondering whether we'd come too far too fast. Dow Jones therefore in the year to date down 12%, S&P 500 down 7%, Nasdaq still seems to be at the vanguard of any economic recovery whenever that may be, up nearly 6%, and the FTSE 100 is still the laggard in terms of the developed markets, down 19% in the year to date. Turning to next week, we've got a few company results which it might be worth looking out for. First of all, Kingfisher. This is the company that owns both B&Q and ScrewFix. ScrewFix has been something of a jewel in the crown over recent years for Kingfisher. The stock was actually relegated from the FTSE 100 in March, but it's re-promoted in June. It's going to rejoin the index towards the end of this month. Strangely, the shares are actually down 10% in the year to date, but the reason for the promotion back to the FTSE is that if you take the share price from the March lows, they're up 57%. Another FTSE 100 company reporting full year numbers next week is the equipment rental group Ashtead. This has obviously a lot of exposure to the US market. Around 85% of its revenues come from the US through its Sunbelt subsidiary, and obviously the construction market is fairly fragile at the moment. That being said, the shares have managed to eke out a small gain of 0.7% in the year to date. Finally, first quarter numbers from the online fashion retailer Boohoo. This is a stock which is in the AIM market. Had a pretty good year-to-date performance. Shares are up 22%. Online retail largely seen as the way to go. It's got an expanding stable of brands. It's made a recent small acquisition and indeed it's had a recent fundraising. So its trading update should be an interesting one to watch. Thank you for watching. Have a great week.